Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, not too long to go before the end of the year, and really the S&P 500, which was where we start the show every week, has defied expectations of any sort of pullback. But do you think there might be a bit of a wobble heading into December?
Yeah, I'm almost loath to say there'll be a wobble, because every time we've sort of said, oh, it's looking like the signs that are there that it might begin to pull back, we've been wrong and wrong and wrong and wrong again. And I know I've said it over and over on the show, we haven't had a 3% pullback in 12 months on the S&P 500, and that's still the case as we sit here right now. So, but anyway, be that as it may, let's have a look at the charts and see what it's telling us. There's the upward channel that's been intact since August. Obviously, that's the fairly recent trading history. I mean, if you were to zoom out on this chart, there's a very linear upward trend that's been intact for the last 12 months. What we have at the moment is there is some negative divergence on the RSI at the top here. What that is where your RSI makes a lower high, and yet the price of the index itself here has made a higher high. So the two are not confirming one another, and typically you see that negative divergence begin to appear before a change in trend. It's one of the few indicators in technical analysis that actually does have a little bit of forward-looking power.
Yeah.
So from that point of view, it's interesting to note. You'll see that over the past couple of days, this market has had a couple of attempts to break to the downside below this upward trend that marks the bottom of that channel. But so far, buyers have been evident at the lower levels to push the price back up. So you know, it really remains to be seen at this stage whether we do see a deeper pullback or not. I think if we start to break below the bottom of this upward channel quite convincingly, then there's a chance we maybe go back down towards the 50-day moving average here, which comes in at about 25.40, and that's where you may see this index get into some support. Just in terms of where we are positioned, we've got an option structure which runs out until the 15th of December, and the payoff of that structure is illustrated on the right-hand side there. So below 25.60, we'll start to make some money on that. Down at 2500 is where we would make our maximum profit. And I suppose in a secret kind of way, I am hoping we see the market come off, because that would certainly help our performance on our offshore portfolio, which has been pretty poor this year.
Yeah, not so secret, Garth.
Not so secret. Everybody knows.
Exactly. And the local markets, I was speaking to someone who actually told me he sold his Satrix shares because he just thought Naspers had gone nuts, and now is the time to cash in. So. And there does seem to be a little bit of a turn taking place. Yes,
over the last week we've seen the top 40 consolidating a little bit. So here's the chart of the top 40 future, and this is now we're actually trading for the December futures contract. So this is the one we're looking at over here. This is the daily chart, and I'm going to take a look at an hourly chart in a moment. What's evident is that you can see there has been a consolidation that's happened over the last couple of days over there. On the weekly chart, there was actually a weekly reversal that occurred last week, which is quite unusual. We haven't seen one of those for quite some time. But as we sit here right now, there's that upward trend, that blue line is still very much intact. If the top 40 starts to break below this upward trend and starts to break below this moving average, which is a 5 exponential moving average, then maybe it's possible we see a little bit further pullback down towards 53,000 or 52,500. But let's see. Let's first have a look here at the hourly chart. So what this now is a 1 hour chart where every candlestick pattern here represents 1 hour worth of trade. You can see it basically goes back to the beginning of November. Around about a week ago, there was this big gap up on the 7th or 8th of November. And that, I've thought for all along, that was probably an exhaustion gap. And you can see quite clearly the market didn't go much higher than that gap, and then it started to pull back. It's now really stuck in a range between 53,900 at the lower level here and 54,200 at the upper level. So if it starts to break convincingly below 53,900, then I think there's a chance we go lower to those levels that I mentioned on the prior slide, back towards 53,000 maybe. On the other hand, if we break out above 54,200, then chances are we're going to go and revisit those prior highs up at about 54,600 again. So it remains to be seen which side of this trading range we break to. And there are a number of variables, one of the big variables, of course, being the rand.
Yeah. Unfortunately, we're probably totally out of the money with that options, the expiry being December
well, if we just quickly go back to the prior slide, look at the daily chart. This option structure is illustrated on the right-hand side here. I mean, it's so far away that you almost feel that the market would actually have to crash in order for that to materialize for us in December. And I don't think that's going to happen.
No. Okay. Right. Well, let's revisit last week's trade, which was a long position in Exaro.
Yeah.
Hasn't really done anything. So where are you at?
Yeah, it's been a little bit of a bumpy ride for those that have followed this trade, and obviously for us that are in this trade. Last week when I was here, I said that the share price of Exaro had been consolidating sideways between 140 Rand and 150 Rand, and it looked as if it was poised to break to the upside above 150 Rand. So we went long, we bought 200 CFDs at a price of 150 and 65 cents. That was after it had begun to look as if it was breaking to the upside of that trading range. It then had a nice rally and then promptly reversed back inside, which is never a good sign. And the stop loss at 145 has been flirted with a couple of times over the last week. I haven't stopped the trade out because I use manual stop losses. I don't use an automatic stop loss, and I know that some of my clients that followed this trade did get stopped out on some of that intraday volatility where it triggered below 145 Rand. I've kept the trade on for the time being. If it starts to move convincingly below 145 from here, then I will stop it out and just call it quits on this trade. But I think for the time being, I'm going to give it the benefit of the doubt and still think there's a possibility that it maybe breaks to the upper end of that range and then goes on towards our target, which is 160 Rand.
Yeah, okay. So obviously something that you'll be watching quite closely.
Yeah.
And then this week, and in fact I've started to get questions on it on Stockwatch asking what to do about the banks in the likely event of a further downgrade. So tell us your thoughts about the banking index.
Yeah, so this is the JSE banking index over here, and to me it's starting to look vulnerable. It's, you know, over the last 3-4 months you can see it's been trading more or less sideways. You can say that this is a bit of a triangular type of pattern, that it's narrowing into the apex now. What's got my attention now is the fact that the index seems to encounter selling pressure at the upper end where this downtrend resistance comes in. It's around about 7950 on the banking index, and there's what looks to be almost like a little rising channel, or possibly could even call that a bear flag forming over there. Now if this starts to break to the downside, then I think there's a chance that we're going to see the banking index go back down to the 200-day moving average, which is at about 7550. The long tails on these candlestick patterns over the last couple of days suggest to me that there is selling pressure happening at the upper levels. If we were to get a ratings downgrade on the 24th of November, which is when Standard & Poor's and when Moody's are due to review South Africa's credit rating, and specifically we're talking about our domestic credit rating here, because those two agencies still have our domestic debt at investment grade, but there looks to be a fairly high probability now that that is going to be downgraded to junk status, or sub-investment grade if you want to be politically correct. And if that were to happen, then chances are the banks will come under pressure. I
suppose the one caveat is that if it's so widely expected, and this is a point that I made last night on Monday's shows, if it's expected, then why isn't it in the price already? It
is a good question. Look, I don't know that it's slam dunk at this stage. I think that maybe some of the market is saying, well, there's a chance that maybe they wait until the February budget and give Malusi Gigaba a bit more time. But I mean, if you had to ask my opinion, I think there's like 60% chance we'll get downgraded and maybe 40% chance that we won't. It's certainly not a slam dunk, but I think the odds are higher that we get downgraded than that we don't get downgraded.
Okay, so you're not going to be shorting the banking index, but you are looking at Barclays Africa.
Yeah, there's no way to short the index itself. So we're looking at a stock, and if you look at all the banking stocks in the sector, they all have a fairly similar technical setup. The reason why I've chosen Barclays Africa is because it's the weakest on a relative basis among the big four banks. Nedbank also looks quite weak, then Barclays. Standard Bank and FirstRand are stronger on a relative basis, but when I say that, all the four banks have the same sort of technical setup in that they're all making these little rising flag wedge type of patterns which look vulnerable to breaking to the downside.
I mean, just a quick point before we get into the trade. When you talk about a relative basis, do you just essentially pull up the charts against, say, the other four banks,
yes,
and look at the performance?
Correct. You would look at a share price graph relative of one versus the other, and just say, right, on a relative basis, which one is showing outperformance and which ones are showing underperformance. And Barclays and Nedbank are the two that are really showing the biggest underperformance. FirstRand and Standard Bank are showing relative outperformance. within a sector that generally looks rather vulnerable.
Yeah. Okay. So take us through this trade.
All right. So here's the chart of Barclays Africa. You can see that similar sort of triangular pattern over here. This looks more like a descending triangle with the flat bottoms here at around about 136 Rand per share. You can see how the stock has encountered selling pressure up at the that downward trend over there, which is at around about 144 Rand. Now, what I've decided to do is I've gone short. I've put a short in at 143 Rand 90 today, being Tuesday. Stop loss is at 147 Rand, and I'm looking for a move down basically back to the previous lows, which are at around about 136 Rand. That's my initial target. I think if it starts to trade underneath 136, then it could get a little bit more ugly from there. But let's not preempt that for now. To me, this trade setup with the risk to reward ratio makes sense just with those figures that I've quoted there.
And those lows are actually quite recent. I mean, you know, or towards the end of October.
Yeah, that's right. They've September, October. It's not that long ago that the stock was trading at those lows. And if you zoom out further to the left on this chart, you'll see that Barclays actually has been generally a perennial underperformer for quite some time. So on a relative basis and on an absolute basis, this stock does look vulnerable to me.
Okay, so the mechanics of that trade, Garth.
All right, so we've gone short at 143 Rand 90. The stop loss is at 147 Rand. My risk per share, therefore, is 3 Rand 10. That's the difference between where we go short and where our stop loss would throw us out. The risk is 1,100 Rand, so that's 1% of our capital. Keep in mind we've got 110,000 Rand in our account, and I'm willing to lose 1% of that if I'm wrong on this trade. So we take the portfolio risk of 1,100 Rand and we divide that by 3 Rand 10, which is the risk per share. Comes out to 355 CFDs, so that's what I've done. I've gone short 355 CFDs for our portfolio this week. The target is 136 Rand to the downside, and that means therefore that our risk to reward ratio is 1 to 2.5.
Okay. I mean, and the 1% position size, I suppose these have been, you actually haven't taken a 2% position size in the last few trades that you've made. No,
I haven't. I mean, it's probably been a few months even since we took as big a position as 2% risk. I guess it comes down to the fact that it's been a tough year, and my feeling is often you want to trade bigger when you're doing well and things are going in your favor, but when they're not, just take your foot off the gas a little bit in terms of the risk exposure. And I think because it hasn't been a fantastic year for us, that's no secret. I'm not going to be hugely aggressive on these trades at this stage. I think if we get to a time again, and when we get to a time again where things are going well and we've got managing to string winning trades together, yes, then I'll up the stakes a bit. Yeah. But in a time like this, my feeling is always to just rein it in a little bit if things are not going well. Yeah. So the portfolio is not too much change from last week, I imagine. No, not too different. This is our South African portfolio. Our Exaro trade is making a little bit of a mark-to-market loss there, so that's weighed on the portfolio slightly, but we're still up almost 11% for the year to date on the South African portfolio. And then of course our offshore portfolio in pounds is not looking great. We're still down 10% for the year to date. And I think I'm very much sort of almost hanging on to the possibility that this put spread structure on the S&P 500 will pay out for us. And if it does, then I suppose that'll be some savior. If it doesn't, well then we'll have to just write that amount off for the end of the year and come back and try harder next time. Yeah, okay. Garth, we have to leave it there, unfortunately. Thanks as always for joining us. Garth is, of course, founder and editor of Traders Corner.